And I had ascertained that the leg of the bull market we're in right now really started. I mean, remember, we had a horrible year in 2022. And then in the spring of 2023, we get NVIDIA and the blowout numbers and the guidance. And I think we can date May of 2023 as the inflection point of this massive generative AI trade. Just as we could date the summer of 1995 when Netscape went public as the start of the internet mania. This really started almost 2 years ago, and then it's cascaded into this year. And of course, it's broadened out. So what I had said was, under the proviso that we've hit an inflection point in the technology curve, that we've engaged in some sort of, I don't want to call it new paradigm, but let's just call it a model shift. And we've seen a shift in the technology curve with all sorts of future implications for productivity growth, and then what that means for corporate profits, since productivity leads to a lower corporate cost curve. And I was always wondering all year long, looking at all the classic different multiples that we look at, price to earnings and price to sales, price to book, the Buffett indicator, everything is just off the charts. And yet money is just plowing into the stock market like it's nobody's business at what I thought were these borderline insane or maybe just insane valuations. And then I realized that, well, if in fact we're in this situation where investors are looking at what AI is going to deliver in the future, then the investor class has naturally lengthened their time horizons. So they're looking beyond just the next year. They're looking at the next 5 years. And we saw this last during the mid to late 1990s, how investors reacted to the onset, the advent and proliferation of the internet and all its applications and all the assumptions that were made. So there's a lot of comparisons, similarities. There's differences, but a lot of similarities, because that's the last time we really had that sort of inflection point on the technology curve, and we know what happened. 1995, starts off as a internet bull market, turns into a raging bull market, then turns into a mania, then a bubble, and then the bubble bursts. And I suppose that, not really a conclusion, but just an observation that it's next to impossible to know. I mean, we're not in 1995 or 96, but maybe we're not in 99 or 2000. Maybe we're in, 1997 or 98 or 99. Where are we in this phase of the symbiotic relationship between a new technological innovation and the market process of pricing in the future? So I was willing to entertain that. That is the primary explanation, is that investors have lengthened their time horizons and are willing to ignore the classic valuation metrics that in the old days, I think would have had anybody concerned, or certainly taking profits, rebalancing the portfolio, diversifying. None of that has happened. That's really what caught my eye this year, was that the market is moving north in a serious way, and there's been no rebalancing. Nobody's rebalanced. Nobody's taken profits. Nobody is diversified. Everybody is all in. So a lot of this was trying to explain what is with this behavior. And I said, I don't think I'm going to call it a bubble anymore. I'll find something else to call it. Maybe it is just a mania. But I also said that maybe there is something beyond the mania that isn't completely irrational. Doesn't mean I agree with it, but in my piece, I tried to explain what it is that the bulls are seeing and what the bulls are pricing in that I didn't bother to do this past year. And that was the premise of the report.